Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates Asset Management. Well, last week you will remember that I recalled those ancient ads for Kleenex table napkins from years back. You remember? It clings like cloth. Well, those three stock market indices that had been clinging like cloth around their key breakpoint values have all definitively let go and are all looked to be heading lower. I also said that I was curious to see what the FANG stocks would say, and on Friday of last week and this week they have spoken. Not quite with one voice, at least as of yet, but 6 of the 8 FANGs, as I have defined them, which includes Tesla, are speaking increasingly clearly, although not yet universally, loud and clear. Last week, I asked, is the market prepared to ignore the poor values currently in existence and go back to its carefree ways prior to the NASDAQ peak in the October-January topping process? Or are concerns rising? This week, I think that the market gods are responding to my questions. However, before we take a look at the FANGs and what's going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with Amazon, which Amazon has been quite remarkable. When the stock was bouncing along its bubble price, it bounced there with accuracy. Do you see that? And therefore, when it broke out and then pulled back to its HB1, which is 9.5 times book value, and it broke through, I think that is a loud and clear message. I think that Amazon wants to come back to earth, and given the trend of its fair market value, I'm not surprised. NVIDIA came down to its HB2 and just cut through there, just like a knife through hot butter. Not surprising given the trend of its fair market value, but also what's been going on in its industry as well. I don't want to terrify anyone. Particularly any small children that might be watching, but I did want to show you the very long-term view of NVIDIA. And when I do that, what you can see here is that that big cycle, the big semi-cycle that this company gets into, when it's over and when it's lets go, it can go a long, long way down. So, thus far, I'm only looking for a decline to the bubble price. And by the way, if you look closely at how NVIDIA has been trading, it's been coming down 2 breakpoints, up 1, down 2, up 1. And this time, if it's now come back down to the breakpoint, and if it goes down the 2 that it has been coming down, it's going to go to its bubble price. We call that a stair-step decline. And remember, I showed you that some while ago when I showed you the picture of Coca-Cola when it peaked out way back in 2002. Turning to Alphabet, 2 of my undecided stocks. You can see here that it's kind of forming a little bit of a sort of a technical platform there, and it's been holding. It's pulled back there, didn't quite get there, but that's the way it's been forming. And the other stock that's been doing that, of course, is Meta, and here its platform has been almost perfect. Both of them have come down, by the way, and rebounded today. In fact, most of the FANG stocks have done that, sort of what I would call a breakdown pullback, which particularly I think would apply to Amazon. So there's my two dithering stocks, still dithering. Microsoft, well, Microsoft in what has been a sort of a nice rally day, a nice rally afternoon, has done nothing. In fact, it was trading off another day, and not terribly surprising either. The stock could not get through its HB2 price. I didn't think that it could, and in fact, it didn't even get there, and it looks very much as if it's pulling back. And probably pulling back now to its HB1, where probably it should have gone in the first place. Tesla, same story, also pulling back, although it's getting fairly close to its HB4. But, Tesla, which tends to be fairly volatile, in a kind of a volatile afternoon, did very, very little. So I suspect that it is not finished its downward trend to its HB4, but the question, of course, by the way, which is 20 times book, the question is that going to be able to hold? We'll see. Now, Netflix has had a nice bounce today of almost 3%. And to me, that isn't terribly surprising, is it? As I said, look at the super growth price had been a long-term, a 20-year low for the stock. Didn't quite get there because I think of anticipatory buying. But when it broke out over its LSG price, which is 4.5 times book value, broke out, pulled back, broke out, pulled back here, but looks as if it's gathering its strength again. I still like Netflix, and I would hold it again as long as the LSG price holds. The last stock that I want to look at, and is a stock which I think I would still have to hold from an SVA perspective, is Apple. And I say have to hold from an SVA perspective because if I look at the trend of the balance sheet, okay, this rebound, of course, is post their most recent balance sheet. And if the stock has continued, the company has continued to buy back stock, therefore we're probably looking at a trend that's somewhere down here, if that is the case. Anyway, without a clear SVA sell, I probably would continue to hold it. Not, by the way, terribly willingly, because I don't like the look of the market. Now, in summary, I think things are clearing up. Whether you would add nicely probably depends on your portfolio holdings. Starting with Amazon, my concerns that the HB1 price, that's 9.5 times book value, would not and could not hold have been realized, and a decline to its bubble price, that's 7.4 times book, I think is now pretty clear. What will happen there, however, is perhaps a much more critical question. But do stay tuned when we get there, because historically, when stocks fail to hold at their bubble price, things have turned really ugly. Now, NVIDIA hit the line and just crumpled. It has what I call a stepping down stairs pattern, down to up one, down to up one. The bubble price, or 7.4 times book value, should be the next stop. Like Amazon, the failure to hold its bubble price would also have severe implications. If you happen to be stuck in this stock for some reason, I didn't want to give you nightmares, but the long-term downside target is far beyond anything that one can imagine right now. Remember last week, I said that Alphabet and Meta were dithering, albeit on the wrong side of their key breakpoint values? Well, they still are. But now on the very low side, or they had reached the very low side of what had turned out to be a fairly persistent range. I'll bet you that the market technicians are looking for a low right now, but you should know that I'm not. Microsoft has slipped back from its abortive effort to rally to its HB2, that's 12 times book. And by the way, I would have to reiterate that that is 12 times adjusted book in case you have tried to duplicate our SVA charts at home. I didn't think it could reach or exceed that mark, and so now we will have to weight events at its HP1 price. That's 9.5 times book. Tesla also hit resistance at its HP5 or 26 times book, and as expected is on its way down, but it hasn't yet reached support. Okay, at its HP4 or 20 times book, where the next decision point will be. That leaves me with Netflix and Apple. Netflix is still above its low super growth price, that's 4.5 times book, and what looks to be a recovery from its trip down almost to its super growth price, its 20-year valuation low, and a very long-term bottom. And here I must add, so far. Last, but the furthest from least, Apple remains a bit of a conundrum because of its stock repurchase activities, which has kept changing the picture of its structural pricing. While the share price had almost reached its former absolute high prior to that October-January meltdown, by the way, I can't say that it has been any particular paragon of strength and comfort in the recent market weakness. Given my market outlook, I personally probably would not hold the stock. But without the next balance sheet, which would tell me where the actual HB6 price would be, I have no SVA reason to sell. So I guess I'm stuck holding it. 2 weeks ago, I observed that all three of the buy-hold FANGs were voting for higher markets. Last week, I qualified that by adding, at least, I hope so. This week, only Netflix would visibly appear to offer much hope, and our fingers are crossed for Apple. Finally, all three of the market indices, the NASDAQ 100, the S&P 500, and the Standard & Poor's TSX, have all abandoned their efforts to hang in at key valuation levels. You know, I was thinking when I put it that way, it almost sounds as if the market were a single stock. And here's the thing, the market indices do trade like single stocks. And that has been one of the most fascinating things that we have discovered since we started using SVA in practice some 35 years ago. Take the Standard & Poor's 500, for instance. Here we have 500 stocks, as if they were of one mind at those key turning points. Certainly the NASDAQ 100 acted precisely as if it were a single stock at the October 2021, January 2022 peak. And since then, almost every stock in that index has either been wounded or crushed since then. Last week, I invoked the bureaucrat's code in forecasting the direction of the markets. Remember that? When in doubt, mumble. Well, this week, I'm in no doubt whatsoever where things are going. And as you saw today, the FANGs are lining up in agreement, although it's not universal yet. In a sense, the FANGs are a bit of a microcosm for the overall market. Not everything is down. Some selectivity is certainly working. Our own North American value model portfolio is up 7% this year against an overall market loss of about minus 5%. And you too should be careful not to throw out the baby with the bathwater in your own portfolios just because markets are heading lower. However, this is likely to continue to be a difficult market to navigate without some clear channel markers. The potential losses and or gains that lie ahead will likely continue to be substantial either way, particularly with the overall markets where they are right now. So, if you'd like to join our investment community and find out what to do with your portfolio holdings, go to www.strategicanalysis.ca/pricing. and get started. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. In the meantime, have a happy and safe Labor Day weekend, and I'll see you all next Friday.